and have here the governor of the Banque de France, François Villeroy de Galhau, with us. As François, welcome. As this year's speaker at this Michel Camdessus lecture. Very, very warm welcome, François, here at the IMF. His lecture will commence in a few moments. Before that, let me invite Managing Director Kristalina Georgieva to the podium to deliver some opening remarks.
Mesdames et messieurs, bonjour. Ladies and gentlemen, it is my great privilege to welcome you today. I want to recognize that we have with us, as we heard from Tobias, family of Michel Camdessus. We also have two first deputy managing directors that make us very proud, Anne Kruger and John Lipsky. Welcome. And of course, many friends of the fund, many of the senior leaders at the fund and staff that has been working so hard over the last years to serve the membership. I cannot be happier, François, that you are with us when, for the first time since the pandemic, we can be together and we can have you in person. And there are two reasons why I'm so thrilled that you are the one that comes today. The first one is that in you, we have somebody with remarkable policy integrity and vision. And we need that in the complex times we face. And the second one is because you and I have been having many meetings of heart and mind, not least because of the shock climate imposes on us and on our future. So today we sit in this room. Like many of you, of course, I opened up the news, and the news was CPI higher than expected, markets down. It is just one snippet of the uncertainty and difficulties we face. In short 3 years, we have experienced a shock upon a shock upon a shock. First, the pandemic, then Russia's invasion of Ukraine, both contributing to a push of prices up, to a stubborn inflation translating into a cost of living crisis. In October last year, when we had our annual meetings, many of us were quite upbeat. Growth was coming up strong. We ended the year with 6.1% growth. And vaccines gave us the confidence to expect that the pandemic is over. So we thought inflation that we were experiencing would go away. And we were proven wrong. Wrong when Omicron hit, wrong when Russia invaded Ukraine, wrong when during this summer climate shocks have affected dramatically agricultural productivity in many places, and we are likely to suffer that further in the future. So inflation is stubborn. It is more broad-based than we thought it would be. And what it means is that we need you, François, we need central bankers to be as stubborn in fighting it as inflation has demonstrably has been. We are mindful that you are on the front line, and all in this audience, we are with you, and of course we at the IMF work relentlessly to provide the analytics that can help us steer through this time of uncertainty. There are remarkable differences between where we were in 2020 and where we are today. In 2020, once we diagnosed the pandemic as a major supply side shock with, of course, demand side implications, it was straightforward. Monetary policy accommodation, fiscal policy accommodation. Today, monetary policy has to tighten up, whereas fiscal policy still bears the burden of supporting the most vulnerable. If it does it well, we might be and of course, if central banks do their job well, we may be swinging through next year with less pain. But if it does it poorly, if fiscal policy is not targeted sufficiently, then it may become the enemy of monetary policy, fueling inflation and making your job tougher. And then we have the issue of debt. 25% of emerging markets are at or near debt distress, including countries that we did not expect to see in this category. Over 60% of low-income countries are in debt distress. So what it means is that first and foremost, large creditors like China, like the private sector, have to take the responsibility to act to prevent the risk of a debt crisis growing. But it is also an issue for advanced economies and, of course, very relevant for the credibility of monetary and fiscal policy. So what we have learned from history? We learned that it is credibility and public trust that matter. And so you, as an example of integrity and backbone, you never mince your words. You are the right person today to talk to us. And you have chosen a great team. I'm so very keen to hear. So let me move straight to 3 points about Francois. First, a true European from the Alsace region, speaks French, German, and English. I was going to say equally well, but you know, French, of course, is the music of languages. He spends time in his region, and over lunch he would tell us more about that. Second, I learned that his favorite book is Stefan Zweig's autobiography, The World of Yesterday, Memories of a European. Vividly portrays incredibly tough time in Europe, including inflation running out of control. The third is that we have somebody who is so rounded, has spent 12 years in the private sector, spent many years in the Treasury. Since 2015, is the central banker of France. La Banque de France is lucky to have you. He is, of course, member of the European Central Bank Governing Council, but most importantly, he now chairs the BIS, which is that makes you, Francois, the central banker of the central bankers. So let me welcome you to the floor. We admire what you have done with macroprudential policy, build buffers in France. They helped with COVID. We admire your leadership on the network for greening the financial system. But above all, we are pleased that our speaker today brings some of Michel Camdessus with him. They're close friends, and apparently Michel Camdessus participated in the thinking for this lecture. So with Francois, we get to him and Michel Camdessus for today. Francois, bienvenue.
Dear Kristalina, dear Tobias, dear friends, because I have only friends in this audience, Thank you very much for your kind words. Maybe too kind, but we'll see. And thank you for inviting me to give this council lecture. It's a very great pleasure for me, for all the reasons you mentioned. And I would like to take this special opportunity to pay a tribute to Michel and express also, yes, my personal gratitude. Michel is not only one of my predecessors as the governor of the Banque de France, but also a friend of mine, and yes, I must confess it, in front of his family, Camille and Nicolas, Michel is more than a predecessor, he's a master for me. My speech was prepared, you mentioned it, Kristalina, with his precious help. And to give you some fresh news from Michel, although he's now 89 years old, he's fit and well. I spoke with him still on the phone on Saturday. He conveys his best friendships to the IMF and to all of you. And today you can almost enjoy a Camdessus lecture by Michel Camdessus himself, because we prepared it. So all what is good in my lecture will come from Michel, all what is bad will come from me, as this is the rule of the game. The somewhat unusual theme I proposed for today, the ethics of currency, has guided Michel throughout his career. I thought that in the murky waters we all are navigating through today, it was good to take some altitude, to take a step back, and ethics of currency should more than ever serve as a golden thread. I will first briefly discuss the reasons why I dare to talk with caution, modesty, about this ethics of currency. Then I will elaborate in practice on the golden triangle of trust. And finally, I will raise the very important question, especially here, as to whether the international dimension of trust can still inspire us. Let me start with some brief theoretical considerations and etymological. We must find a common definition of ethics. Is it possible to take this word as a synonym for morality? For centuries, these questions of ethics and moralities has mobilized generations of philosophers. Supporters of the synonym theory highlight a common etymology between the two words. Morality is a Latin translation of the Greek ethos. The two words, nevertheless, have followed different paths over time. Morality can be described as a hard concept, similar to the fundamental rules engraved on Moses' stone tablet or in the Code of Hammurabi. In contrast, ethics refer to a softer and less binding concept, a kind of existential version of morality with a more personal dimension. I will use the word ethics in that way in this speech. Let me give a noteworthy example, the question of interest rates. It went from a moral prohibition in the ancient times to a more flexible and ethical approach. From a moral overall ban, ethically fair interest rates have been progressively distinguished from usury rate, with the latter still being forbidden. Homo economicus, as we all know, invented currency very early in human history, and it is striking that almost as soon as currency was born, countless abuses were seen as well. Manipulation of gold or silver weight in coins, including sometimes by the sovereign himself, skewing of scales, and so forth. As early as in the 4th century BC, Aristotle famously identified the three functions fulfilled by currency. I reassure you, I won't take my whole lecture speaking about the Greek ancient times. But Aristotle complemented this brilliant theoretical approach, and very early one, with ethical guidelines opposing unnatural chrematistics or personal enrichment and virtuous economics, economia, literally household management, to the benefit of this entire community. And this very simple distinction can still be very useful for us. I jump to the more recent times. With the acceleration of historical transformation, the 20th and early 21st century have been particularly rich in the emergence of economically ethical issues. The Great Depression led to protectionist reactions, which themselves led to economic disasters, a powerful inspiration of social, a powerful movement of social inspiration reacted in turn by trying to bring back order in monetary affairs and, yes, multilateralism in international ones. I will come back to that in my third point. In the 70s, however, neoliberal thinking, inspired by men such as Friedman or Hayek, caused a swing of the pendulum. In Hayek's opinion, for instance, this is striking, trying to subject finance or the economy to ethical principles was a waste of time. Today, after new crises and with the emergence of fresh concerns, the pendulum has swung again. To give just one example, environmental concerns have acquired an essential ethical dimension. Let me add a last, somewhat theoretical distinction or consideration between the ethics of money and the ethics of currency. The ethics of money are customary and widespread. They can be summed up, among many other quotations, by the words of Alexandre Dumas II, a famous French writer. A small parenthesis about French literature. We have two Alexandre Dumas. The father is the most famous one, is the author of The Three Musketeers. But the son was also a writer, and he wrote, I quote him, "Money is a good servant, but a bad master." This is probably the best sum up. The ethics of currency that interest me today are obviously part of this ethics of money. But they are less common, and they have two specific features. First, the importance of institutions, of the sovereign dimension. There is no currency, let me stress it very strongly, without a public authority that guarantees it and is responsible for it. By the way, this is why there is no such thing as a cryptocurrency. And second, the importance of trust, which can be defined as being able to count on the character, ability, strength, or truth, yes, truth, of someone or something. Today, we central bankers are responsible for trust. We produce it and we stand accountable for it. Such a responsibility entails a strong personal component. Our behavior has to be flawless and driven by real functional requirements and high ethical standards. But let me today focus on the institutional and collective foundation of trust and come to my second point about what I call the golden triangle of trust. And here I will put these principles I mentioned in practice. Let us try together. Trust relies on three key elements, and this is what I call the golden triangle: independence, mandate, and accountability of central banks. Some may take them for granted, but they are actually the result of a long historical progress, and each of them is being challenged today. First, independence. and this long historical quest with a current calling into question. It took a long time for trust in currency to be dematerialized, to move from trust in a physical medium, gold and silver and metallic currencies, to trust in an institution. The 19th century, with the Industrial Revolution, saw the expansion of banking and finance and the creation of many central banks. It was a first decisive step. A dedicated guardian was put in charge of issuing banknotes as the first, at that time, immaterial currency. The second decisive step, and we know it, it's mainly from late 20th century, in the 80s and 90s, was to make central banks independent from political power in order to ensure the stability of the currency. But independence, which I cherish, does not mean isolation. The context of the Russian war in Ukraine challenges us to reinvent the dialogue with political authorities for at least 3 reasons. Because geopolitics are today a major determinant of the economy, because the energy markets, their regulation and pricing are key for inflation, and lastly, because fiscal choices regarding subsidies to households or even to firms are far from neutral for monetary authorities, and by the way, for the IMF, we discussed it with Gita this morning. Another challenge to independence, and a more tough one, is that the populist ideology creates an atmosphere of general mistrust of institutions and still more of independent ones. At worst, this would call into question our democracy and its necessary checks and balances. At the very least, it is imperative for us to be efficient in our mandate and to increase our accountability. And let me come to the second corner of the triangle, efficiency of our mandate. Price stability, which is a prerequisite for long-term growth, is the primary objective of most central banks. Broader mandates, nevertheless, apply to some, notably the Federal Reserve, with its dual objective. Other central banks have expressed sensitivity to, say, climate change or to inequalities. Some observers question this alleged mission creep and wonder whether central banks have lost sight of their primary responsibility. Against this backdrop, I tend to refer to Max Weber's distinction between ethics of conviction and ethics of responsibility. Ethics of conviction is a driver for a broad mandate, but also to a risk of over-promising. Ethics of responsibility is a driver for realism and a more focused mandate. Our Eurosystem answer consists, as you know, of a clearly hierarchical mandate with one primary objective, price stability, but if fulfilled, we can and must contribute to the secondary objectives of, I quote, also the European treaties, economic growth, social cohesion, and the environment. Let me clarify that the Eurosystem's strong commitment to fight climate change is motivated first and foremost by its profound implications for price stability, and we could discuss this later, through impacts of climate change on the economy and on the financial system. In other words, when we are acting decisively against climate change, we are acting in the very name of our primary mandate. I spoke about efficiency of the mandate, and here obviously we are challenged. Inflation has accelerating significantly over the past year, reaching 9.1% in the euro area, and we saw it yesterday, 8.3% in the US. Monetary normalization is consequently fully warranted, including in the euro area. It's too early to tell the final interest rates in this journey. But the neutral rate, R star, helps us to give some light on the first part of the journey. I believe it in the euro area to be estimated as below or close to 2% in nominal terms, and we could be there by the end of this year. Until then, we definitely have to act in a determined but orderly way. Doing so is normalization. Only beyond R star would tightening begin if needed. The US is obviously closer to tightening. Due to several differences in the nature of inflation across the Atlantic, the monetary answer must have its differences too. But in both cases, let me stress that, it's not only a legal duty, it's also an ethical commitment from us central bankers. Ensuring price stability is our responsibility. Our will to deliver and our capacity to deliver on our mandate cannot be subject to any doubt whatsoever. Turning to the third corner of the triangle of trust, accountability, you remember that famous sentence attributed to Alan Greenspan, quote, "I know you think you understand what you thought I said, but I'm not sure you realize that what you heard is not what I meant," unquote. This provocative sentence certainly captured the difficulty for central banks to account for their monetary policy. But let us be clear, it belongs, or it must belong, to a bygone era. No matter how complex, it is central banks' duty to account for their monetary policy decisions in a comprehensible manner. Accountability is the natural, the obvious counterpart of independence. And this necessary change, which is a challenge, has both a cyclical and a structural component. The cyclical component pertains to the way we can combine agility and predictability in a very uncertain environment. We should be careful not to return to secrecy or to unnecessarily add to financial and economic volatility. Otherwise, as research at the Banque de France shows, economic agents may begin to question our ability and commitment to fulfill our objectives, which could translate into disanchored long-term inflation expectations. I suggested in my recent Jackson Hole speech some principles for what I call this new predictability. Let me put it this way. Not having a forward guidance does not mean, cannot mean, not having a narrative or a monetary strategy. The structural component of the accountability challenge is that our communication must not only resist the risk of political dominance or market dominance that would run counter to our independence, but also resist two additional risks that appear more specific to the current period. The first risk is the dictatorship of short-termism imposed on us by a recent series of crises. Of course, we have to deal with this crisis, but we must not become a prisoner of emergencies. We must continue to focus on the longer term, also in keeping with our role of advanced sentinels. Central banks rely on their close monitoring of all financial and economic indicators and also on their anticipation of how they may evolve in the future. The second risk is that of corporatist fragmentation. It is, we all know that, the other disease of this century. Of course, we are not responsible for it, and we are not corporatists, but we could be sinning by omission, by passiveness. Contrary to a long-standing approach whereby central banks only dialogue with financial specialists, we must now direct our communication at all economic agents, including the general public. A better informed society across categories allows for a better understanding of monetary objective and hence a greater efficiency of monetary policy. Tailored and active communication is now a centerpiece of central banks' actions. To give you the Banque de France example, which I know best, in 2021, we initiated the Banque de France Listens initiative. It included 17 events with an audience, including online, of more than 300,000. This year, we organized our annual National Monetary Policy Forum, reaching an online audience of 500,000. I come to my third and last part. Does the international dimension of monetary trust still exist? And this is obviously a core question here. It has become, let us say it frankly, a painful question. With the ongoing destructive Russian war in Ukraine, adding to the other illnesses of multilateralism in the last 6 years, from Brexit to populism and poorly disguised protectionism. Let us acknowledge it frankly. The G20 is not in good shape. Whereas it had been key to great progress over the last 20 years. And sanctions against Russia divide the G20. It is still hotly debated whether these sanctions are necessary and efficient, or, on the contrary, whether they are counterproductive for the countries that initiated them. I believe that we should stick on this issue to a few simple facts and principles. A, the surge in the prices of raw materials, primarily of oil, dates back to rumors of war and then to actual invasion in February, not to the sanctions that followed that invasion. B, in the short term, the Russian economy seems to be losing less ground than expected, precisely because of that surge, but its long-term growth potential is obviously greatly weakened by technological sanctions. C, there are moments where what is ethically fair prevails over what is economically profitable. Even if in the short run there may be contradictions between the two, a sustainable economy cannot exist without an ethical basis. But, I stress a bit, justice also enjoins us to deal with the situation of the poorest countries and people in this Ukrainian crisis. The world's community drive to achieve unity while respecting diversity should nevertheless remain widely recognized as an essential aspect of the pursuit of the universal common good. The tale of the euro in the last 30 years is particularly inspirational in this regard. In present adverse circumstances, we should assign top priority to a few courses of action. Let me call it focused multilateralism or pragmatic multilateralism. It obviously, and you mentioned it, Kristalina, it obviously includes climate. But I will today concentrate on two other issues. First, designing a consistent framework to ensure that crypto assets do not undermine confidence in the financial system. They bring positive technological innovations. But here, global regulation under FSB's umbrella is key. But it cannot be central banks' only answer. It has to be accompanied by their own innovations. The main rationale for central bank digital currency is to preserve the role of public money in a fast-moving economy. But with the aim of avoiding further international fragmentation, we have to pay special attention then to cross-border interoperability of CBDCs, and hence to wholesale CBDC, not very frequently mentioned, in addition to retail CBDC, as a way to ensure this interoperability. The second paramount priority of action is to reposition the IMF as a pivotal stakeholder at the very heart of the global financial safety net, GFSN. Today, IMF resources account for a smaller share of this GFSN. But there has already been significant progress. The last general allocation in August 21 of US dollar 650 billion. It was, to quote you, Kristalina, a shot in the arm for the global economy at a time of unprecedented crisis. And let us remind that it was before the invasion of Ukraine. However, we know there is a challenge. Developing economies are the primary users of SDRs, and they have benefited much less from the general allocation. About 2/3 were directed at developed economies as a result of existing rules. Reallocating, rechanneling SDRs is crucial. The G7 commitment taken up by the G20 to bring this reallocation to 100 billion must be kept and implemented quickly and efficiently. We are not yet there. Part of these allocations have been allocated to the PRGT fund to finance low-income countries. Still, we have to find additional resources to finance the subsidy account of the PRGT. Another part of these reallocations, 37 billion at this stage, is about to become reality by IMF annual meetings in October. We strongly wish it. Thanks to the newly created Resilience and Sustainability Trust. I am sure I agree with the MD in wishing the RST to be higher in its amounts, quicker in its disbursements, and not too conditional in its provisions. And these are three possible messages today. And we have to care not only about the lending capacity of the RST, but also about demand for RST facilities. France will be true to its word, and we will reallocate at least 4 billion SDRs, representing at least 20% of the SDRs we received. More generally, the IMF must play a greater role in crisis prevention for vulnerable countries. This is even more pressing in the present context of unstable geopolitics, looming food crisis, commodities price volatility, and more frequent natural disasters linked to climate change. I therefore welcome the recent proposal of a new food shock window, but here again it must be increased. Our efforts should not stop there. Let me conclude coming back to the Greek philosophers, and this time Sophocles. He wrote, "Trust dies, but mistrust blossoms." Let me stress that trust as a shared treasure also has a key human foundation, which we have passionately built over time. I sometimes call it the immaterial treasure. International meetings in Basel at the Bank for International Settlements, and thank you, Kristalina, for mentioning it. I have the honor to chair it, and I had the pleasure to be in Basel with Tobias and with others 2 days ago. Or here in Washington at the IMF, are not places for mundane agreement, as some sometimes think. They are forums for true dialogue. By building on a common diagnosis, by discussing openly, frankly, our concerns, we know that in these forums we won't be leaked, we won't be instrumentalized, we won't be distorted. This is the only way for trust to prosper, and this is how we will progress together. Michel Camdessus himself has symbolized this value of humanity like none other in his personal behavior and in his human relationships. I thank you for your attention.
Fantastic. Thank you very much, Francois. I can say now that Michel Camdessus helped you write your lecture, and you helped me write my speech for the annual meetings. Very deep thinking and profoundly important topics you brought today. I would take advantage of this conversation we can have to ask you to go a bit further in your direct, candid way. Starting with the question that is on many people's minds. Are central banks still trusted? Is the public confident that they can do what is necessary? And how do you see securing this trust? You talk about some of the critical element of it, but at this moment, faced with the history of the last year, from transitory to stubborn, how do you see central banks standing tall and being able to do their work?
Let me first say, Kristalina, that we should obviously remain modest, humble. And by the way, this word comes much more often in our speeches, but it's not only an attitude, it's for most of us a personal conviction. No institution can pretend at present to know with certainty the truth, and no institution, coming to your question, can pretend to have the full confidence of the general public in our democracies. Having said that, I see two signs of reassurance, but relative reassurance. First, when we have surveys about the level of trust in the institutions, the answer for central banks remains better than for other institutions. And to be clear, better than for more strongly political institutions, including governments. It might be unfair. In all our democracies, we know that governments are very unpopular and distrusted. But it happens to me, if you allow me one off-the-record remark, quite often that the French minister, Bruno Le Maire, with whom I have independent but confident relationship, says, François, or governor, you should say this because people will listen more to what you say than to what I say. And I find it difficult for him, but courageous to acknowledge that. The second positive sign is that inflation expectations, and these are figures, remain in most of our jurisdictions, at least where there are independent central banks, rather well anchored in the long term. I don't want to over-interpret this and to say, look, this is a sign for complacency or comfort. We should not be complacent or comfortable at present. We should act and be very open. But it's a sign that people trust us. Having said that, we will be judged, not at the end of the year, but at the end of this period, we will be judged on our results and our capacity to bring inflation back to our target. As you know, in the Ecb forecast, at present, we expected in the next 2 years, so till the end of 24, obviously It cannot be a firm or a certain commitment because it will depend on energy. But we are responsible, accountable for this trust people still, I think, put on our shoulders.
That is very true and very encouraging to hear. In that spirit of people still have more trust in central banks in relative terms, and actions central banks are taking are to reinforce that. Can I ask you a question that is again on many people's minds? We were in low for longer. And in low for longer, both the Fed and European Central Bank have looked into what they can do to boost inflation. And actually, the sort of conventional space not being enough, how to create more space for it. So there were reviews, there were frameworks. Is it now time to look at it again? And what is your sense as to whether there are tectonic shifts that lead to structural drivers of more systemic inflation? For example, the fact that if we are fragmenting the world economy, that inevitably that would put pressure on costs. Just rethinking the concept of economic efficiency by including supply security, that would probably add to costs. Maybe the pool of lower cost labor for some advanced economies would somewhat shrink. So how do we think about it? And what would be your guidance? I see right next to the two former first deputy managing directors, our current first managing director, Gita Gopinath. I saw Pierre Olivier, of course, Tobias is here. What is your advice to us? What to focus on?
This is a difficult question, Christina, because there are many different points and items in your question, and trying to answer it in front of so distinguished skills is really very risky. So, but let me perhaps stress three elements. First, about the past. I don't belong to those who will spend hours and hours regretting our past monetary policy. I think it was warranted. We didn't have enough inflation. This was not a worry among the general public, let us be clear. In this sense, the situation is asymmetric. People are much more sensitive to too high inflation than to too low inflation. But we know that from an economic standpoint, we had to deal with the risk of deflation. And this was a serious threat. Remember where we were a bit more than 2 years ago, in March 2020, with the COVID shock. Hadn't we acted at this time with strong reactions, we would have been criticized for missing the economic priority of that time and for missing our mandate. And remember, we should always look at what the critics of today said yesterday. It's a useful exercise. Some of them criticize us at the time for not doing enough. So this is my first point. I think it remains the same mandate, but these are very different circumstances. Second, you raise a very difficult issue about the structural trends. Probably most of us, and most of economists outside of this room, agreed some years ago that there were structural trends to disinflation. Take globalization, take digitalization, take a less unionized worker force, etc. We were probably excessive in this analysis. Should we turn to the other side, the other corner, and say now we see structural trends for further inflation? I'm cautious about that. I wouldn't bet, for example, that this is the end of globalization. It will be a different one, but globalization, we discussed it, by the way, in the BIS 2 days ago, has very strong and permanent factors. One very important change is true climate change and the energetic transition. The jury is still out to know whether it will bring more activity and or more inflation or the contrary. It could lead to some more inflation. It has no role to play in the present inflationary surge. And this is very important to disentangle and not to have confused ideas about that. Climate change has nothing to do with the present inflation. But it could come in a slower and more gradual manner in the future. We will see. And this brings me to the last question, probably the most difficult one. Should we change the framework? I don't say that the frameworks we decided around 2 years ago on both sides of the Atlantic are absolutely perfect. They are not, and no framework is perfect. Perhaps we underestimated, and here again I take the IMF view, we're underestimating a bit the risk of running the economy hot. And you mentioned it, we were not vigilant enough on the supply side. But the core of the framework, that is to say, inflation targeting, price stability, it's our mandate, obviously. Inflation targeting is a way to translate this mandate in operational terms and putting the inflation target at 2% in the medium term, I think it remains true. It was true when we had to stimulate or run an accommodative policy. It's true when we have to normalize and tighten. So the operational questions of today are no longer what about the lower bound, what about unconventional policies, obviously. But this does not mean we have to apply a different part of our toolbox in a different economic environment. I don't think it changed or it completely reversed the framework. This would be my answer at this stage.
Well, great, great answer. So let me go to a very easy question.
I fear the worst difficulties. I'm very cautious.
Eurozone. Eurozone and where ECB finds itself. Europe, of course, is more directly impacted by the horrible consequences, economic consequences of the Russian war in Ukraine. There is certainly fear of recession in some countries, or even if it is not recession, that it would feel like recession this winter. And if Mother Nature decides not to cooperate and the winter is actually harsh, that could lead to some social unrest. So ECB finds itself in a position to play its role vis-a-vis inflationary pressures, but remain mindful of the necessity to keep the economy going. You are a member of the Governing Council, so what is your vision for monetary policy in the Eurozone that best balance these two concerns? I thought it would be easy.
No, this is, as announced, an easy question. No, let me perhaps say briefly two things. First, Europe is obviously facing a crisis, and an economic crisis, which is much more difficult for us than, say, for the US, or even for some emerging economies when they are commodity producers. But seen from outside, and let me stress it, nobody should underestimate the capacity of Europe to react to crisis. I don't say that it's our natural element, but unfortunately we have had to deal with many crises, the last one being COVID. And you know that Jean Monnet famously said Europe makes progress through crisis. And if you look at our long history, it's true. If you look in COVID, remember the start. We were in the front line. It started in Italy before the other European countries and before the US and elsewhere in the world, if I accept China. And it was very difficult. And there were many, many doubts. But then we had this reliance fund with this common debt for 750 billion, a historical step. And then, less often mentioned, we had these common purchases of vaccines, and we are the continent, or we were the continent last year, with the highest rate of vaccination, while keeping exporting. So, Europe has been quite successful in COVID, and there are many discussions at present at energy in Europe. Ursula von der Leyen, by the way, you are probably aware of that, why we are here for the Council lecture. She is making the most important political yearly statement in the European Parliament, and she announced many things.
We
will see how it evolves. Obviously, there are some difficulties with some European countries, not the most important ones, which are closer to another part of the conflict. Let me express it this way. But look at the decisions which have been taken on sanctions and probably on the energy markets. I'm rather confident on that. Turning to your question on the ECB, I will perhaps not describe in full detail what we intend to do at each of the next governing council in the next 6 months. First, because I'm not allowed to do it, and second, because let me be frank, I don't completely know. but let me stress that the answer to your question is a bit simpler in our case because we have a priority mandate on price stability. And so if we had to choose in this trade-off, price stability is our compass. Having said that, and this is why I think that at least in the short run, this question is not so important. We are, as I stressed in my speech, in a normalization phase. We are not yet at the neutral rate, wherever it is. But if it is at below or close to 2% in nominal terms, as I said, we are, since last week, at 0.75. So this part of the journey is quite easy. We only have discussions about the pace. Should it be 50, 75, more or less? It's open, but I'm not sure it's that important. When being at neutral rate or around neutral rate, then we will have to assess the situation. Where are we when we look at the inflation and growth outlook? And should we go further? If needed, we will go further. But I think that this first part of the journey is not a part with trade-offs.
I really like very much the phrase you used. You said, beyond neutral is real tightening. Up to neutral, this is just normalization, and it is a good one to remember.
Let me be honest, because this is a friendly and high-level audience. The charm of this approach is that we don't know exactly where neutral is. So but no, it came, as I said, we shouldn't have too precise forward guidance and tie our hands. It's obvious in uncertain times. But I think it's useful and necessary to have a narrative.
One question that for many of us at the IMF is preoccupying our thinking and our work is what about emerging markets and developing economies? Advanced economies are tightening. That has implications, spillover impact on emerging markets, especially on those that are impacted not only by tightening but by the dollar appreciation with large dollar-denominated debt. What is the advice you would give these countries and the advice you would give us on how to deploy something that Banque de France has excelled in, which is macroprudential? How do you see it? How do you see also the engagement of advanced economies on this question and the impact on emerging markets?
Here again, there are several important items. I will put aside macroprudential policy because I think that in this regard it's probably not the key answer at this stage in emerging economies, but we will probably come back to it. Let me first say that the situation of emerging countries obviously strongly depends whether they are commodity producers or net exporters or importers. For those of them who are exporters, it's not a too bad story so far, and we saw no generalized emerging economies turmoil, which is good news. for the world economy. And by the way, many of them had strengthened their financial situation before this crisis, fortunately, including reserves, improving their external accounts. There are some exceptions. You will allow me, dear Kristalina, not to mention any specific countries, but we probably think of the same, which are good IMF correspondents, hopefully good IMF correspondents. What kind of advice could we give? I don't have to give advice to other countries, but obviously the kind of reaction which we saw in many emerging economies on monetary policy was the right one.
Yeah.
And if you look, this is very striking. If you look at the cycle of tightening or normalizing, use the word you want, it began in some emerging countries before advanced economies. This is a specificity of the situation we are in, and it's a very welcome one. Having said that, we shouldn't forget about three issues we have. First, we have issues about the exchange rates. They are not easy. I only mention them. Second, we have obviously issues about fragmentation. And these are longer-term issues, fragmentation, but fragmentation in payments, in global trade, which could affect the growth in emerging economies in the long run much more than the monetary tightening. And third, and you mentioned it, and I stressed it also in my lecture, we speak about emerging economies, and powerful countries are around the table of the G20, of the IMF, of the BIS. But we should not forget about the poorest. And if I see a risk, it's this one. Because if I take many African countries, for instance, are clearly on the side of the losers. It's why RST and rechanneling of SDR is so important, PRGT, what you have with food shock window, etc. It's probably not hugely expensive, but if it's not a top priority on the dialogue because they are less represented around the table, we will have missed something very important in ethics, but also in the long run in economic efficiency. So I stress this worry.
Thank you, and I just want to echo what you said about costs of supporting low-income countries, not so high. When we did the round of emergency financing, when COVID hit, the low-income countries received $27 billion. Just to put this in perspective, our largest borrower has $44 billion outstanding to the fund. So we do need to consider the disproportionately high value of early support for these countries vis-a-vis the risk of what they would suffer, but also spillover security risks for them, and in the case of Africa, for Europe.
Can I still stress your point? If we look at the way we managed collectively the COVID crisis, it was not that bad. I would say it was rather good. But we missed something, the vaccination in the poorest countries, the global vaccination of the world. I wouldn't like us to miss, after the Ukrainian crisis, the fate, the destiny, the solidarity with the poorest again.
I hope this would be something you say in a month from now when we are here for the annual meetings. It actually takes me to the point you made that I wrote down, focused multilateralism. We are at a point when, yes, there is fragmentation. Doesn't mean that we let down our guard and throw our hands in the air and announce defeat. It means identify where we can build bridges, what are the important issues where without cooperation everybody loses, and then march. You talked about one of them, crypto and CBDCs. You made a very relevant point that for crypto it is a matter of regulation and consistency, but also a matter of speed. We are already behind. And for CBDCs, it is a matter of interoperability. And again, we have to move. From your position as a chairman of BIS, how do you see BIS, FSB, and the IMF working together so we can accelerate what needs to be done on regulation and consistency, as well as on the matter of interoperability?
It's a sensitive question, less difficult than dealing with the Ukrainian crisis. I'm confident we will find a way to work well together, and BIS works more with central banks, IMF perhaps in this issue more with governments, and we have many opportunities to meet. But let me perhaps share two worries on this issue. The first one, you said we are behind the curve. I don't know. But at least it's very important that we take all this international work, regulation, reports. We know what to do. It's written in excellent reports, be they from the IMF, FSB, etc. But we implement them quickly in the major jurisdictions. We are there for the European Union. We adopted, it was not very noticed, at the end of June, at the end of the French presidency, the so-called MiCA regulation. I would like all major jurisdictions, again, I won't quote any names, but some of them are not very far from here. I would like all major jurisdictions to implement, to apply this international principle in their own regulation. And this would be the decisive game changer. Second, about CBDCs, and this is an important part of the dialogue probably we should have with politicians. Public attention is focused on retail CBDC, which I mentioned. I believe it has a future, but it raises many difficult questions also about privacy, about effective use, including by merchants, etc. Wholesale CBDC is not very often mentioned. It does not raise political interest, mediatic interest, but here the use cases are probably still more obvious, much stronger, including for the interoperability cross-border of CBDCs. So I would like the discussion about CBDCs to be a bit more balanced. It's not wholesale against retail. My guess is at the end of the journey we will need both. But let us explain that also wholesale CBDC is a key economic challenge, and probably a challenge also of sovereignty. We cannot allow, or stability, we cannot allow, if you look at financial settlements, market infrastructures, with a very strong global dimension, we cannot allow what we have built together with the private financial institutions for decades to disappear or to be affected by a disorderly switch to private assets and means of payments. I don't say they don't have a role to play. I think a partnership can be very useful. But this is a key question for global financial stability.
I agree. Since you mentioned Alexandre Dumas, the father, and the Three Musketeers, my dream is that Klaus of SFB, Augustine of BIS, and myself, we are the Three Musketeers that have to venture for success in what you just described. And if you, as the one coming from the country of Alexandre Dumas, bless us, it would be a fabulous journey. I think...
do you allow me one word?
Of course.
About French literature, which goes well with the ethics of currency. You probably know that there is a fourth musketeer.
Of course, we do.
In the novel. And so who is to be the fourth musketeer, we will see, but I hope that the four musketeers together will be very efficient, not only in reflection, but in implementation. And by the way, you are aware that the Three Musketeers comes from the south west part of France, what we call Gascogne.
Yes.
And Gascogne is very close, if you know France a bit, is very close to Bayonne, where Michel Camdessus lives and is at present. So he could be the fourth musketeer.
I will make sure to communicate to him. He is being trusted to join. Excellent. I do believe I speak on behalf of everybody in this audience and those online, saying this was an incredibly substantive and somewhat uplifting, because while you describe reality pretty well, you also brought this sense that we can come together, and yes, there may be pain, but because we are together, there would be less of it. Our hero today, Francois, you get our round of applause and our gratitude. Well, thank you. And many thanks to the audience. This is nothing without you being here.